Hey everyone, it's Ryan. This is Dirk.
Hey guys. So this is something totally new. This is the first time we're doing this, but this is a podcast. And so we thought it would be really cool just as a lender and a realtor just to give you guys some content throughout the week, or I don't know if we're gonna do this weekly or monthly.
Yeah.
We don't even have a name for this podcast yet.
Not yet.
But we're super excited about it, and we hope you guys will tune in. So hope we don't bore you too much, but I think this is going to be really cool, and just we'll give you guys some insight into the real estate market,
Yeah.
and especially in Grand Rapids where
Yeah.
it's so hot. Like, this can be something really cool. So I know, Ryan, this was your idea, your vision,
Yeah.
and I've kind of like tagged along to it here. So thank you for that. But
sure.
I want to give you a chance. What's your idea for this podcast? I'll kind of let you expound on that, and then we can cover today's topic.
Please, yeah. So going forward, the vision is, we really just want to be a resource for our clients, right?
Mm-hmm.
People look to us for being professional and knowing what's to come in the market, what might be the disruptors, and how can we provide more value to them. So this is one way I want to, and I know you do too, want to provide value to our clients and say, this is our knowledge, let us share it with you. So on that, some of our topics that we're going to talk about today, we're going to talk about the rate environment. We're going to be talking about what is happening with the homes in Greater Grand Rapids, but also talking about, our clients' buying and selling power, and then also a few call to actions here today. So, before we jump into that, I just want to give a quick market update.
You want to?
Well, yeah, let me give the market update.
Yeah, let's
do that. So, Grand Rapids, itself, we're looking at, we just ended October with a little over 2,000 active listings. So 2,049 active listings with 933 sales, right? So that only leaves us with about 2.2 months of inventory. That meaning, like, if all those houses were to sell and we're out of houses, we're only going to last 2.2 more months. So that's a call to action for our clients out there that are ready to sell to do so now.
Yeah.
But in addition to that, we're seeing quite a bit of equity growth here in Kent County. It's great news, right? So we're here with Northpointe Bank today, and we're in their downtown location in Kent County, right? So what's happening in Kent County? So homes here are averaging about $243,000 sale price.
Wow. Okay.
Yeah, that's 7% higher than last year.
Yeah, that's awesome.
Can you imagine getting a 7% raise?
I cannot.
That would be sweet, right? But like a 7% raise on a home like that, that's $17,000 in equity.
Yeah.
All right. But before we go any further, let's hear a little bit about who you are.
Okay. Let's back it up.
Yeah. So, rewind.
Yeah. So just for you guys, obviously we know each other super well. And for you guys that don't know us, if you're listening, we've been friends for a long time. We actually first met in junior high at Jenison Junior High.
Bringing it back.
And we were both in choir together with Mr. Waters.
Yep.
Shout out. So shout out to Mr. Waters. But we never really were close friends. Obviously, you're a year below me, and
thanks for that.
Then I mean, we were so it was kind of crazy how God brought us together. You started coming to the same church as me after college, and you might have still been in college. I don't know.
Yep.
So I went to Alma College. I got a degree in business. Didn't really know what I wanted to do. And it was around that time that God really changed my life, as you know.
Yeah.
And called me into serving in ministry as well. And so I had this business degree, and I started serving at my church. And then this guy that I used to sing in choir with in junior high started showing up. And so we've been brothers pretty much ever since.
For sure.
And really tight. And then it's kind of cool then how I got into here, because couple years after serving ministry, I was looking for a job in the business field, and apparently working at a church doesn't look great on a resume because nobody was calling me back. And you were working at a credit union.
Yeah.
And I remember you told me, you said, hey, why don't you apply where I'm working? And obviously I really respected you, and you were making moves and doing really awesome things there. And so I said, I could see that same path for myself.
Yeah.
So I applied, and I got the position. I had to humble myself. I started out as a teller, and I just worked my way up, and I felt like God just kept opening doors. And when I got my first house a couple years ago, I loved working at that credit union, but I didn't get paid all that much for what I was doing. I was doing every single type of loan except for mortgages at that time. I was doing auto loans, home equity loans, second mortgages, unsecured loans, opening up new accounts. So jack of all trades
So
kind
a lot
of position.
of knowledge.
And but I wasn't doing mortgages, and I was in a place where I just wasn't getting paid that much. And I got my first house, and all these new bills are coming in, right? So I was approved for a mortgage, and but they don't tell you about the electric bill, the cable bill, the heating, like the gas bill, all that stuff. They don't tell you about that, right? So
no. Mom and Dad,
yeah,
come on.
So so something to keep in mind. But I started praying about getting a new job, and I didn't care what it was, to be honest with you, and I didn't tell really anybody. And this is like what's crazy. I feel like how God kind of opened the door is I was literally just like, whatever it is, God, you open the door. And the mortgage guy at that branch, who is now my boss here at Northpointe, didn't know I had put my resume together and I had talked to a recruiter or anything, but he just sat down at my desk and said, hey, I'm heading to Northpointe. I got a promotion and I'm really going to miss you. And I was like, no. I was like, don't leave. You know, like, and he was like a big brother to me all the years I was there. And so I was really bummed. But then he turned to me and he quietly whispered, he's like, hey, I want to take you with me. And I'm like, all right. So I went over to his office after he left my desk, and I was, like, hey, like, you don't know this, but I've been praying about this. Like, I'll send my resume. He goes, I'll text you Monday.
There you go.
So that opened up the door. I've been in mortgages now for almost 2 years.
Yep.
It's been really awesome. I'm learning. I'm growing every day. And it's cool, too, obviously, that we've been friends.
For sure.
But you also started in real estate. And so now we can work together as partners and do this kind of thing together. And I just think, obviously, it's super cool, like how God kind of brought that all together. So, like, how did you what's your story? So obviously I told part of it, but like, what's your story?
Well, you started dabbling on some of those things, but, I graduated from Grand Valley State University. When I was going there, I worked for the credit union, and I spent 6 months as a teller, escalated really fast, moved to being a desk representative for about 3 years, and then I took on my first branch management role, and ultimately I was in that role for about 3 years as well.
Yeah.
All the while that was happening, I've just been a huge advocate of learning as an individual. I've always had that pursuit. So graduated, I started reading books right away, got involved with leadership development in that realm, and I just loved it. And I wanted to be that person that could lead others at all times, no matter what I was doing. And I think that's something God calls people to do. And I felt really called to do that because you don't have to work at a church to still do ministry, right? So, and that's something I want to do. I want to provide light everywhere I go. One of those ways I did that is, I started working at the credit union, advanced in my career. When I became a branch manager, I have always wanted to own my own business. I thought it was going to be a pizza shop. I thought it was going to be a couple of different things, direct sales. And I bought a few homes, and I was like, man, I did just about everything on the back end because of our education, right? And I was like, I can show people houses. I can list houses. I know this information. So I naturally spent some money, got my license, started doing it. You were one of my first clients. That was pretty fun.
That was.
So, he's not picky, I promise.
I am a little Dutch.
But even that was a huge learning experience, right? So
for sure.
Got my real estate license, got married, ended up getting my master's degree as well. And here's a little, sneak peek of what's coming in 2020. Everyone, I'm getting my broker's license as well. So that's I just can't stop learning. All that was going so well, and it's led us to an amazing partnership with what we're doing here, and that's ultimately what we want to talk about, right? We want to see this value that we have together, this awesome relationship. So it's like, and I think that's something people want. Is I want to know when I'm working with Ryan, when I'm working with Dirk, that they trust each other. It's not I'm just getting a cold handoff, right?
Right, exactly. Yeah, we're a team, and so that's what's really cool, and that's why we hope that you guys can be a part of that, that are listening and that are still haven't tuned out yet. Like we honestly, like we do care. Everybody says that, everybody says, oh, we care, but we do feel like this is more than just us making money. Making money is great, but it's way more than that, and it's also a chance for us to help people. And I don't know, that's what keeps me going, and I
Yeah.
think I speak for you in the same regard of like, let's help people, let's educate people as we go
Yes.
through the process. Let's not let them be in the dark on anything.
Mm-hmm.
Let's make them understand everything along the way, so that way when they're done with the process and they're signing on closing date, they don't feel like they're nervous or they're
Exactly.
scared when they're signing things, because they've had things explained to them.
Mm-hmm.
Whenever they've had questions, we've been available. So like that's, I know, like our goal always, and we're not perfect, but we definitely like do our best. And I think if you spoke to past clients, they would say that about
Mm-hmm.
us, is that
For sure.
we do care, and I think that's something that we're proud of,
Mm-hmm.
and that we hope to continue in. So let's get back to the market.
Yeah.
What are your thoughts in terms of, where have we been?
Mm-hmm.
Where do you think we're going?
For sure.
There's a lot of talk. Obviously, this is an election year,
Yep.
which if you're not on Facebook, you might not know about, but if you're on Facebook or any other social media, like it's crazy right now, right? So that impacts the market.
It does.
What are your thoughts upcoming? Like, what are your thoughts on the market right now?
I think there's starting to feel that shift in buying and selling power, nationally speaking, but here in Grand Rapids, there's still a lot of things that are in favor of both parties in our area. So, and what I mean by that, the seller's power is still increasing, and I say that because you don't want to sell your home for less than what it's worth, right?
Right.
Typically, at least, it's like you want to get what your home is worth, and you do that arm's length transaction. So, with equity increasing in this area, that means sellers are having more power. But as that value increases, you're also losing more buyers that could potentially buy your home. And with an ever-changing rate environment, like we didn't expect rates to go down this year.
No.
And that changed. That's a pleasant surprise for our buyers, because that allowed them to maybe still afford these homes that they might not otherwise have been able to afford.
Yeah.
So
absolutely.
With that coming, right? So sales prices have still continued to rise. I said it earlier, 7% raise over 1 year in Kent County.
Yeah.
With that, where are our buyers, Dirk? So 1 year ago, we were at a completely different rate environment to where we are today. Can you tell me a little bit more about that?
So last year, and this is what's kind of cool, is last year I had a client that almost mirrors a client that I have right now.
Okay.
So, and it was at this exact same time. It was in November of last year. It was an A++ client, which means 740 plus credit score. He had 30% down. And I just checked today, because I knew we were doing this podcast. We locked him in at 5%. The par rate was actually 5.25, but he bought down the rate a little bit. We can cover that maybe today or another episode, but that's a really cool thing that we can do at Northpointe, that a lot of lenders I don't think do. But he bought down a little bit to 5%. And at that time, that was a great rate. That was the best rate you could possibly get. And our rates are some of the most competitive in the country at Northpointe. So that was even probably lower than what most other A++ clients were getting. Today I have a client, A++ credit score, not putting as much cash down. If you were to lock in his rate today, we haven't locked in yet. I might talk to him later. But he would be at 3.75%.
Wow.
So that's a big difference. And I'll just give you some quick numbers.
Please.
Because I think it's really cool. Because a lot of times you hear these numbers of like 5% to 3.75, like, yeah, 1.25%.
Like what does that really mean?
Yeah, is that really like a big difference? When you're dealing with percentages and large purchases, which buying a home is one of the largest purchases you'll ever make in your life. Let's use 200,000, just to use a round number.
Please.
5.25% over the course of 30 years. And you might want to put some earmuffs on. This isn't going to be fun to listen to. Interest paid over the course of 30 years, if you just make the minimum payment, is $197,000 and some change. We'll just leave it at that. Right? So if with a $200,000 house, we lock you in at 3.75%, so to compare last year's rates to this year's rates, you would have to pay in total interest over 30 years, $133,000. So $197,000 minus $133,000, we're looking at a difference of $64,000 over the course of 30 years.
Wow.
As I mentioned, I'm Dutch. If I lose 64 cents,
Yeah.
I'm worked up and I lose sleep. So 64,000 is a big chunk of change. And to break that down even more, you're looking at a payment difference of, gosh, $160, a little more.
Wow.
You're looking at a annual savings of last year compared to this year of $2,138. So even if you're only there for, let's say, 3 years, $2,100. That's, gosh,
That could be a
okay,
vacation.
so
That could be a lot of things.
$6,300 right there
Mm-hmm.
that you're losing because of the interest rate. So the interest rate is a big deal, and it makes a huge impact
does.
on the buying power and also how much you're going to save over the course of
Yeah.
the longevity of the loan, right? So
And I just want to stop you for just a second
yeah,
there.
yep,
The home price was the same, right? You didn't change
correct.
the home price.
Didn't touch that. Yep.
Only thing that changed was the interest rate.
Mhm.
You're going from one payment of being $160 less than that
Yeah,
to someone not being able to maybe afford that same home just because of an interest rate.
yeah, yep. So this is what I would say to the
Yeah.
people listening is interest rates are historically low right now.
Mm-hmm.
Could they go down over the next year? Yeah, for sure.
Mhm.
Nobody knows. They're projected to go up at the moment.
Yep.
Could they go down? For sure, because last year they projected them to plateau or keep going up.
Yep.
They did not. They were off on their projection. And with it being an election year, it's going to be volatile. We don't.
Mm-hmm.
Nobody really knows. My boss always says, if I knew the market, Dirk, I would be making a lot more money and I wouldn't be doing this. So
Yeah.
so there's going to be people that are predicting things, even scholared individuals, but they don't really know until it happens. So I would say if you lock today,
Mm-hmm.
if you were to buy a house, if you're on the edge at all, please contact us because of the fact that they're historically low. Now, if they do go down over the next 6 months and we were wrong,
Mm-hmm.
they might go down a little bit more, but you're still at a historically low interest rate and you can't be upset about that, right? I'd be pumped. But if you wait and interest rates go up, you might be kicking yourself because you'll be in the situation that my client was, last year,
Mm-hmm.
and now you'll hear from me again probably
yeah.
to refinance.
Oh, yeah.
But if they don't go back down, say you wait and they go up to 5% and they keep climbing.
We were having this conversation the other day, right?
Yeah.
We had those clients that had missed the early bird special before.
Yep.
And now they were too late to the market.
Yep.
And they still made a move.
Yeah.
But now all those people that missed last time, they knew they missed.
Exactly.
So they were chomping at the bit to get these rates now.
Yeah.
Don't miss 2 cycles.
Don't be late to the party, right? So it's like you're showing up to a Christmas party in like February.
Mm-hmm.
You're dressed in an ugly Christmas sweater in February, like people are gonna look at you funny. So don't miss the party. Like now is a great time. Talk to us, even if your credit's not where it's at now.
Yeah.
We both have a lot of experience of looking at hundreds and hundreds and hundreds of credit reports because of our experience in a busy credit union.
Mm-hmm.
So we have experience of saying, here's where you're at, here's what you're doing wrong, here's how you need to fix that.
Yeah.
Let's get you on the right track, and then maybe in 6 months, before hopefully they keep or if they keep going up, we can get you in a house sooner than later. Or if you're ready to go right now, now's a great time. So what are your thoughts in terms of, a lot of people say like, obviously the best time to sell, people say, is the spring or the summer.
Yeah.
What's your thoughts on when's like the best time to buy?
See, well, even on the topic of selling in the spring, that's often a myth as well, especially in our market.
Okay.
I was talking about the amount of inventory that we have right now, right? And how fast it's turning over. There's so much demand out there that we have less than the national average, and we're way below our listing price. I've told you, year over year, these prices continue to go up on these homes. Yeah, there might be a slowdown because there's that thought out there that it slows down, right?
Yeah.
And maybe that's due to the snow and the school season and things like that.
Yeah.
But there are still homes out there.
Yeah.
It's still a good time for you to sell.
My cousin sold last year, and he sold for $25,000 over his asking price.
Yeah.
So I know full well like
it's possible, right?
it's always a good time to sell. Now, do you think on the buying side, like, what are your thoughts on that?
Use it to your advantage. Use that myth to your advantage, right? So if you're a buyer, buy now, because maybe if other people are thinking that it's not a good time to buy and they're not out there shopping, people are still listing their home, buy that home that no one else is looking at, but that is exactly what you wanted.
Yeah.
Don't wait any longer.
Yeah.
But, we're talking about these things, and we're talking about, buyer's power, seller's market, the rate environment, and those things to come. Let's not wait for your rent to go up next year, right?
Yeah.
And there's so many buyers out there still, and people our age, the millennials, are most likely to be renting right now.
Yeah.
But they're going to be transitioning into a home pretty soon too.
Yeah.
Don't let your rent rate go up because there's still a lot of people looking to rent.
Yeah.
Don't let your interest rate go up because we predict that's going to happen.
Yeah. Yeah. I always tell people, get out of the renting situation because you're paying somebody else's mortgage.
Yeah.
And none of that money is going towards something that's really benefiting you. So instead of paying somebody else's mortgage, pay your own mortgage. And I think that's something that a lot of people should consider, because I think we get lulled into sleep, and I do myself. My cable provider has been charging me way more than I want to pay, and I've been meaning to get out of it, but it's comfortable for me right now because I'm busy and I don't have time to find a new internet provider. And when I go home and I need to work extra late hours, I need to have internet. So I've gone probably 3 or 4 months now where I've been meaning to cancel that cable, and I haven't done it yet because it's comfortable. And I think the same thing happens with people in rent is they don't want to move. They don't want to go through the hassle of going through the loan process and putting up with me for, which I totally understand. But don't get lulled into sleep because you're going to pay for it.
And I think what's the biggest resistance to change? It's because people don't have a why behind it.
Yeah.
But your why has just been explained here today on the Unnamed Podcast.
On the Unnamed Podcast.
And now you know why to purchase.
For sure.
Right?
For sure.
So as we're looking forward into 2020, it's ever growing. There's disruptors out there like technology, online shopping, and different AI technology that's out there now as well. But all they're going to be doing is advertising to you, things like that. There's still this relational part of business that I don't think should go away. And I value as a realtor, you value as a mortgage lender. And you know what? That's the value. That's a value we provide. So trust Dirk, trust myself. We want what's best for you. This is an educational tool for our clients. We want to make sure that you're building equity for the future. We want to make sure you're making good, sound financial decisions. Like one of the other topics we could talk about is like how much you could be doing, what you could be doing with that $160, right?
Yeah.
You could be investing that into a children's education savings account. Like these are other products that we might be able to advise you for. Yeah. Imagine putting that $160 into an education savings account. You're now, getting principal contributions for yourself of $64,000 plus probably like $20,000 to $30,000 in growth interest, right?
Yeah.
That's the vice versa, the compounding effect of what interest can do. So,
for sure.
As we're wrapping this up, Dirk, I would, maybe open up, tell them about one product that you're really focused on right now, one thing that you could help them with, and then, let's go from there.
Yeah, so we have a product at Northpointe. It's called the Equity Builder. We've talked about it. The normal conventional products are awesome. The Equity Builder is for somebody that maybe is doing something a little more short term, and they don't want to put a lot of money down. Maybe they want to flip a home. Yeah. So they don't want to use all that money for a down payment. They want to use it to invest into the house. So this is an awesome product for people that are investors, that are people that are looking to make profit on homes and maybe sell again in a few years. Now these are ARM product, which means adjustable rate mortgages. We can get more into that in the future. That's the negative. It's not fixed. So if we do a 5-1 ARM, it's fixed for 5 years. After that, it adjusts to the market. So if you plan to be there for less than 5 years anyways, you're going to flip it. It doesn't matter what it's going to do after that because you're going to sell it. So it's amortized for 20 years. So instead of paying, the lower amount, you're going to pay, like you would for a 30-year fixed product, you're paying it with a 20-year amortization. So you're putting more towards principal every single month. And that's why it's called the Equity Builder, is because you can build equity quicker in the product, which is really cool. It's an awesome product. If you want to know more, reach out to me. What do you got going on right now, Ryan?
Well, I know
you're busy.
Well, business is good right now. There's a lot of things to come. We'll share later in different podcasts going into next year.
For sure.
But one thing I would like to ask from our viewers, our subscribers, goodness, that was a hard word.
It's a tough word.
As this continues to grow, as our network continues to grow, if there's people out there that know contractors, know people that are out there on zoning commissions and different boards out there, there is not enough affordable housing in our market. Inventory's low. Yeah. Most all new construction in this area have to have certain zoning requirements, certain lot sizes, and those don't accommodate for price ranges of the mid to low 200s or lower than that. We could change those things up and make a lot more inventory for our market. Instead of having a 2,000 square finished home, let's do something maybe around 1,500, and let's switch that up. So that'd be a big ask for people watching in this, and see about what can we do to expand our inventory. But in addition to that, as we're concluding, I'd love to invite our viewers to like our video, subscribe to it.
Please.
It might be weekly, it might be monthly. It's to be determined.
Yeah, for sure.
But also, we need a name for this.
Yeah, so let us know. Like, if you guys have a name, the unnamed podcast probably isn't going to fly, right? So thank you guys for listening.
Yes,
hopefully you've stayed tuned to this, and hopefully you found this beneficial. We're super thankful, and we're excited for what the future holds. We're excited for 2020, and we're just really thankful and grateful for the past clients and then the clients we're going to have. So,
please feel free to reach out to me at Ryan Prichard, and that's 616-295-3632, or feel free to reach Dirk at
616-745-8088.
Perfect. All right. Until next time, everyone. Thank you for listening.